How's it, guys? Welcome back to FX Rhapsody. Today we're doing analysis on two currency pairs again. We're going to be focusing on the British pound, Japanese yen, and then also the US dollar, Japanese yen pairs. Before we get started, just go visit my website. Lots of information on my website. We're doing some analysis, or the analysis on the COT reports. The COT reports will be there for you to download for free on the resource tab. There's also some nice resources for those guys getting started in trading that doesn't know, looking at these videos, what's happening. Just go visit my website. There's video categories on getting started, and then also Let's Get Trading tells you all about trading in candlesticks and so forth. There's also my preferred brokers on the website. Just go visit them, go look at them. Brilliant brokers, definitely worth looking out for. I'm telling you all about them on the website. Okay, so let us hit the charts. So on a British pound, British pound, Japanese yen, we're starting off first, and then on a daily time frame, we're doing top-down analysis. So we're starting off with the daily, working our way down to the hourly time frame. So on a daily time frame, what do we see? We can see that the British pound basically made a move to the upside, taking out some liquidity at the top here. So that was our line, and then just zooming in, that was our previous high, and zooming in, we can see that that area was broken. I'm just gonna do that, and I'm just gonna create a thicker line and blue. So you can see that liquidity was tapped in. So basically, with this sell orders that was lying on the top there, all their buy stops for all retail traders, institutes and all that, you have their buy stops on the top there. So price hunting, this is price action, hunting that liquidity, tapping into that, going down to the downside. And then with that, made a nice little pullback. So you can see price going up, going down, pullback, where that pullback go to. So you take your Fibonacci from that low to that high. Okay, and just zoom in a little bit so you can see it nice and clearly. So you can see a swing low and a swing high, price pulling back nicely into our 62% area. Guys, this works out every single time. Well, I'm not going to say it's 100% foolproof or works every single time, but basically this is how I trade with the Fibonacci, using these indicators basically, or the settings, if I can say that. For those of you that haven't seen that, go look at my video, go watch my video on Fibonacci Vision 2, going to be in the description. So basically price pulling into that 62% area, tapping that 62% area, which is a nice area, especially when you're swing traders. It doesn't matter what type of trader you are, but I'm looking at a daily time frame. So on a daily time frame, swing trading, tapping into that liquidity, into that 62% area. If you had to place a buy there, you would have been almost 600 pips strong. Okay, so just putting it out there for you guys. So basically we can see price tapping into that area, going back up again. Let's go down to the 4-hour time frame and see what price is doing. Now, currently, it is with the yen pairs, it is really, a little bit uncertainty to what is going to happen, because when we look at our daily time frame like we just did now, you can see that price pushing up. Now, going to the 4-hour time frame, I want to show you something. So basically price going and tapping liquidity in that area. So I'm just going to put the liquidity line there first so you can see that. Just going to draw another line here, just for our little structure line. Okay, just moving that up again. Okay, so basically you can see that structure, that's for previous. So price going down, making a little pullback, guys selling the price off. Okay, so if you had to sell off here, excuse me, you would have left your stop orders just above that. Price hunting that liquidity, as you can see that tapping into that area. Okay, very nicely. So price going, tapping into that and making a little bit of a pullback. Now, if you take your Fibonacci from this swing let's have a look here. So you have a swing high over here and then a swing low. Now that swing low was your previous area where the 62% on the daily time frame was hit. Okay, so now you just, if you turn that around and you take this out, let's just take all of that out just to not confuse everybody. Okay, so you have that area. So you can see price going down on a 4-hourly time frame, then hitting that 62% area, which was on the daily time frame, now pulling back up. Where does it pull back up to? It pulls to the area between the 62 and the 70 area. Okay, so now, which is a nice area to sell it off. But now also just remember, yes, you can do that. Okay, but we are in a little bit of an uptrend going into this currency pair. So, but if you had to sell off there, and let's say you just sold over there, you would have been sitting with a nice almost 100 pip trade so far. But be wary of price, because there is a tendency the price can go up. Okay, reason price pulled back all the way to there is, if you can see this price moving down. Okay, so you've got a fair value gap that's happened here. Okay, price did not tap into that area. The reason I'm saying fair value gap is structure was broken. Okay, right about there. You can see price hovering in that area, then with a big push down, creating a fair value gap, you know, between this candle and that candle, creating that imbalance in that candle, basically in price. So price tend to move up into that area, but you have another imbalance which was created with this candle. Okay, so you can see with that two imbalances in the market. So price going down, tapping into that area, going up, going into that imbalance area. But again, you know, if you had to trade this, price would have tapped you out because it went up into our stop loss area. So there is still a little bit of an imbalance on the top there. Don't know what's going to happen. So let's have a look at our hourly time frame. And I just want to show you what I'm going to be looking out for. Very confusing, this currency pair currently. So let's just have a look at, okay, so we have got, this is our previous high, okay, that we had in the market, price going up into, tapping that liquidity nicely, as we just saw on all the other time frames, tapping that liquidity, okay. Price moved into a fair value gap, which was created around about there, as you can see. So price going down, okay, price pulled back into that area. So if you were in a buy area, if you want to buy over here somewhere, you know, it doesn't matter where you entered, especially if you were in your if you entered in the daily time frame, or you looked at the daily time frame for a nice buy opportunity, you would have just held up until this area, basically where that price drew into that fair value gap area. But now what I'm waiting to see is I would like to see what happens when price breaks this little area over there. Okay, so currently price going up into that area, tapping that liquidity, going down, and now it's just hovering in this area. Okay, so now I would like to see if price is going to break up and carry on to the upside. Okay, because we have got daily signal of a buy opportunity, or not opportunity, but price moving up. Okay, but we also have on a 4-hourly time frame a nice sell-off area. Okay, so we have two different scenarios in this currency pair. Let's look at the COT reports to see what is happening here. So on the COT report, basically on the British pound, you can see lots of longs being closed, more shorts. So it means the net position of the British, or of the pound, basically is getting stronger. Okay, so which means price is going to be pushing up, right? That's what we're seeing on a COT side of things. If you look at the Japanese yen, So the Japanese yen is just getting stronger and stronger from its previous low that it had. So it went from basically, where's the lowest over here? So it went from a negative 111,000, almost 112k net positions, and it's now sitting on a negative 69, or basically 70,000 net positions. If we look down into our COT reports, you know, very rarely price or the Japanese yen, especially nowadays, went up a lot more. So yes, it looks like a lot of longs being closed. So basically, if the Japanese yen gets stronger, okay, if it goes to negative 50, negative 40, basically the net positions get stronger in the Japanese yen. That means that the currency pair British pound Japanese yen, it will start pushing down. But I doubt that. I'm still biased in price still moving to the upside. So we might see price going past this area basically, or if I can say that, the next little high is going to be over here. Okay, so I'm pretty sure that there's still tendencies for for this pair, the British pound, to get stronger and going up into that area. But again, time will tell. Let's look at the US dollar, Japanese yen. Start off with the daily time frame. So what can we see on the daily time frame? Just minimizing it a little bit. Okay. So again, price is in a very bullish market, right? As you can see, price is in a uptrend, right? Bullish market. You can see price going up and then pulling back a little bit more. So I'm just going to highlight that little area here. So you can see that was our previous resistance area. Price breaking that resistance area, pulling back into that, almost tapping into that area of resistance and going and still carrying up. We have got this high that we're looking at. Okay. So we need that high to be broken, and price just going up into that almost, and then just subtracting a little bit to end the week just above that. So basically you can see price hovering in between those two areas in the market. On a 4-hour time frame, let's have a look. I'm just gonna do that, zoom out a little bit, because I want to show you why price moved down or pulled back a little bit. So you have got this previous high over here. Okay, this is where price, remember I told you that on the daily time frame you could see that previous resistance area. So that was the resistance area. If you can see that, resistance, price breaking that area, creating a fair value gap in the market. Where's that fair value gap or that imbalance? It's going to be this big push candle. Okay, so that candle created that imbalance in the market, and I'm just going to highlight it there. So it's going to be from, let's zoom in. So that's going to be from that candle over there to that candle over there. So that gap that it formed created a fair value gap in the market. So that was going to be where price was going to trace or retrace back to. It's going to be drawn to that area. So basically price going up, hitting a high, getting drawn into that area, into that fair value gap, and that is a nice area to buy. Okay, so if you did buy in that area, again, look at that, you would have been sitting with at least a 350 pip move that happened, you know, in the last couple of 4-hour candles. Big moves, guys. And this is the moves that you need to catch. Always look out for that areas where it's imbalance in the market, imbalance in the candles, creating that fair value gaps in the market, basically. Okay, so we're looking at this area over here where we have got some liquidity lying. Okay, that's going to be our big area in the market. So currently price in between those areas. Let's just have a look at the 1-hour time frame. Again, still in a bullish market. There's no signs of basically price turning down. So basically what I'm going to be looking out for is going to be two areas. So I'm obviously going to be looking at that high in the market right there. Just do it to there. I'm going to be looking at this low over here. Okay, that's going to be our low. Because as you can see, price is currently in between those two areas, bouncing off, yeah, that support, let's call it, or that low, and then price coming up again, not breaking that previous high that it formed on the 1 hourly, staying within that. So we have got big liquidity lying on the top here, and we have got some big liquidity lying at the bottom here. So those are the two areas of concern for me, or interest, if I can say that. So I'm definitely going to be looking out for to see what price does. Will price carry on to the upside? Let's just go to the COT reports. We did look at the Japanese yen, so we can see that the Japanese yen is getting stronger. Yes, okay, we see that. But again, just be wary of what happened in the past when the Japanese yen, it did get stronger. You can see that big fall on the bottom. So it gets stronger, then it falls, and it falls again. So basically, with this big push that it happened now, let's look at the market. So we have got that big push, but there is definitely tendencies for price to maybe just carry on down to this area. And if it carries on, just look for those imbalances in the market, that gaps that forms, okay, to catch it, especially on the lower time frames, to catch the pips, just until we see any break in structure. So structure meaning, or is going to be breaking, tapping into that liquidity, and then carrying on to the upside. And we're looking at definitely price maybe, you know, pushing down even more for the Japanese yen getting weaker, basically dollar getting stronger, and the dollar getting weaker, Japanese yen. So Japanese yen getting stronger, meaning price is gonna start dropping. Okay, that's what's gonna happen if the Japanese yen gets stronger. If it gets excuse me, if the Japanese yen starts getting weaker and the dollar gets stronger, we will see price carry on to the upside with that big bullish movement that it's currently happening. So guys, that's all from my side. I hope it makes sense. Not a lot of movement in this Japanese yen pairs, a lot of I would almost call it confusion, but just keep an eye out on that, and just go down to lower time frames. You know, with these movements in the market, yes, there's lots of opportunities, especially on your lower time frames, 15 minutes, 5 minutes, 1 minute time frame, to catch those trades. So don't forget to like this video, hit that subscribe button, hit that notification bell. You can see there's some more analysis coming your way this weekend, and then definitely some more strategies and some trading content coming this week. It's going to be an interesting week, so let's look out for that. So guys, I hope you stay safe and happy trading, guys.